You just raised $15 million at a $1 billion valuation, which my math's not always perfect, but I think that's 1% or so, 1.5%. I thought when you hit that unicorn status, you would raise 150 and dilute 10%. Why raise 15 million? You Pegasus? You're being super frugal? What's even the point of raising 15 when you're at $1 billion valuation?
We are quite frugal.
Profitable or close?
We are. Most of the money we spend comes from customers. Let's put it like that.
So spitting distance. If you wanted to be profitable, you could.
If we weren't investing as heavily in R&D, we could. Yeah.
So back to the question, why raise 15? You're going to go out and raise money. Why not raise 100?
The big reason for that round was actually to get Jeff Immelt, the former CEO of GE, involved in Formlabs. So he's a venture partner at NEA, and a woman named Dana Grayson at NEA. Actually, she's starting her own fund now. She led the round, and Jeff joined the board.
I thought that they were those type of big firms. What you hear on the streets is they need to have 10% ownership. They need to be able to put in $50 million checks or it's not worth it. How do you convince somebody, because NEA's got multiple billions of dollars in their funds, how do you get them to write such a small check and have such a small ownership percentage? Was that an issue? And why do we hear that issue constantly?
Yeah, it's definitely a point you negotiate on. I think they have their business model where they sort of have a target investment, but every company's different, every situation's different, so there's always some flexibility there. And we had just raised $35 million a few months before that, so it's kind of a $50 million round.
So it's a little top off at that valuation. Yeah. And then how do you look at this business now that you're in getting close to that decade? People expect it to go public or have an exit, and you're raising at $1 billion. We just saw Masayoshi-san and SoftBank kind of back off a little bit of like some of these later stage rounds, and people are generally questioning, like, is it a good idea to stay private that long? What kind of advice are you getting in this sort of roller coaster of the industry changing from growth at all costs, go big, stay private, to get profitable? And how do you think about it personally and how you want to live as a founder?
We've always been a very disciplined company that's focused on, again, most of the money we spend coming from customers rather than burning lots of investor capital. That's been true since basically like year one. We launched Kickstarter. We got started end of 2011, and by the end of 2012, we had taken $3 million in pre-orders, and with less than $2 million in equity raised.
Wow.
So we've been selling stuff and trying to build our business, maybe not organically, but trying to build it sort of sustainably from the beginning. And I think that's the right way to do it in this industry. There's certainly like, if you're building a consumer web thing where scale really matters and network effects really matter, like maybe it makes sense to lose $1 billion before you
turn on advertising and piss everybody off.
And I think one of the really big mistakes that's happened in venture capital in the last couple of years is that people have assumed that model could be applied to a lot of other industries where it just doesn't work, and you end up, all that money you burn doesn't actually get you some value that stays. Like, it might have helped drive some revenue, but not in a very sticky, sustainable way. Yeah,
investing to have 1 billion people on Facebook or 100 million people using Snapchat, we pretty much know how the advertising world works. You can pretty much model it. But if you're doing something new like Uber or Lyft, or DoorDash and Uber Eats or whatever it is, like, do we know that losing all this money makes sense or not? And the public market seems to think not.
Subsidizing rides for years and years and years, it's unclear like what value is left today. Whereas for us, when the money that we're losing is primarily going into investing more heavily in R&D, and after a few years of R&D, we have a very clear thing left over, which is a product that we're selling, which is better than what exists out there. So I think we try to stay disciplined. We don't try to lose, when we're selling in terms of sales and marketing activities, we make sure we don't lose money there, because that just doesn't make sense.
And then how do you think about from this point forward? Because that's the big question today. Should you go public? Should you stay private? And you're kind of at that point where it used to be when you hit 25, 50 million in revenue, you went public, you're over 100 million in revenue now. Are you feeling pressure to go public or exit because you got Boston-based company, like they're not used to $100 billion companies? They probably very much would appreciate a quick billion to $5 billion exit.
You're right. A lot of Boston investors are not used to that sort of thing, which is probably why we have very few Boston investors.
Exactly. No offense to Boston investors, but they are scared.
There are a few great ones there.
But they're scared. A lot of them are scared.
Yeah.
All downside protection.
Yeah, and so we have ended up with more Bay Area investors. So how
do you think about that?
Yeah,
I think file, or you think you're going to just stay private for a little
For
longer?
me, in terms of like my personal goals, and I think also reflect what most of the people at the company are interested in, going public or staying private is sort of orthogonal to the goal. The goal is build more awesome stuff and get it to lots of people and make an impact with that.
Right.
And do that at a bigger scale, make more products, get them to more people, and keep going there.
But you get the reality of the board pressuring you a bit, like, hey, we got to do something.
So the good thing is we do have these really long-term focused investors.
Oh,
There's not a huge pressure there. As long as we're growing and making progress, then they have the ability to wait. And I think board and investors are aligned that going public has to make sense for the company. Doing it too early, it's a huge overhead and a huge distraction. If a company can't show kind of really regular, predictable revenue and earnings.
You feel you have predictable revenue now, or is the industry still emerging and you're still figuring it out?
I think we shouldn't be going public today.
Yeah.
That's
it goes back to the sort of opening of the show when I was talking about, hey, how predictable is it? You're still in that point of time where maybe dental's the entire business. Maybe there's an entire business just on dental globally, and like that's a hard decision for you to make as a founder who loves 3D printing, right? Like if you're just going for the IPO, then logic might say just pick the one vertical that works best and ignore everything else and just be a dental company.
And I think a lot of our success has been actually avoiding that trend. That's a lot of the advice we've received. A lot of the sort of like classic advice for a B2B company is sort of to like pick one vertical and focus on and specialize in it. And that, I think, is how a lot of the existing 3D printing companies have been built up. They're not always just focused on one vertical, but they sort of align their products and their go-to-market and everything around that. And they've missed the opportunity to do this broad-based investment in one technology platform where if we actually put, even though we are not one of the bigger companies in the industry, we put more R&D into a single printer model than anyone else. And that's part of how we deliver much more printer per dollar than anyone else. It's sort of, Apple is kind of the best example of this, where they have less SKUs than companies with far less revenue than them.
Yeah.
And so they get to invest so much in making every single product they make the best by far.
Yeah. When you look at AirPods, it's like there's 100 knockoffs on Amazon right now. And just in terms of elegance and, what just works, the AirPods work the best. But it is interesting, the knockoff.